We are here on gold charts, and this is Simplified Forex Classroom, where we simplify the complicated. I am going to show you how to trade the market using just the simple terms. No need to learn too many things and get yourself confused. Anytime you open your chart, these are the three things you are to look for before you pick any trade. First one is to know your direction of the market. The second one is to know your area where you're going to enter the trade. And the third one is your entry trigger. That is what you want to see before you hop on that trade. If you keep it simple, everything is going to be easy for you. If you know price action and you know the movement of price, you know anytime you have a push, you will surely have a retracement to the downside. We have a push here, we had a retracement. We have a push, we had a retracement and a push. Okay, so we are going with price action and also the movement of price and using market structure. In an uptrend, we saw how price push break this high here. The same thing happened here. There was this high taken out. You can see when price pushed from here to this area here, push to the downside, we were expecting another push to take this high also, but what happened? This push got here, start retracing. Okay, so even this area here should let you know that once this high wasn't taken out, that means price wants to reverse to the downside. Okay, so going by just the action of price or price action lets you know that this is the behavior of price. Okay, and anytime that price breaks resistance or support, there has to be a retest and a push. You can see there was a break, there was a retest reaction here, and there was a drop to the downside, guys. So you need to know where the price is going, that is the direction of price, and then you think of where am I going to hop on that trade to ride the price, and also what should be my entry trigger before I hop on this trade. When you look at gold, you can see gold is bullish all the way pushing to the upside. You can see how gold is behaving. Gold is pushing to the upside. So this area here was the high it created before it pushed to the downside here, created another high. We have another low. Okay, so it's basically like price is trying to create a higher high, higher low. We are going to go up, create another higher high, and then we look to continue to either create an all-time high or we look to trade whatever the direction of price or gold is going. When you look at this area, you can see the same thing happen. What I was talking about, the same thing happened. If you want to follow price action or the action of price, you will never be wrong, or you always be right every time. You see, we have a low here. There was a push to the upside, created a high. Another push created a low. We have this high here, a low, another high. We had this low here. Okay, so you can join this one together with either a trend line or something like perfect trend direction, guys. You see how price is pushing. Even when we extend this one like this, you can see that even price came all the way, tap onto the trend line. So it pushed to this low before another push to the upside. So if you try to follow price action, you always know the direction of the market. Now you can see based on internal support and resistance, we are all the way heading to this area here before we try for a breakout and continuation, because we want to see another higher high created, guys. So this is the simple steps to follow every time you are analyzing your market. First of all, know the direction of the market based on the support and resistance, the higher highs and higher lows. And now you think of where should I enter that trade to ride the move. And the last one should be your candlestick confirmation. So when you come to the 4-hour time frame, you're gonna see that now we have this area here as a minor support. You can see the minor support here. There was a breakout, a retest, and now pushing to the upside. You can see that was created there. And even this area here was actually a demand zone which was created down below here. That was where price came all the way, tap into it, and is pushing to the upside. Now we have this supply zone created at this place also. That is where this resistance is. So we are heading to the resistance or the supply zone, and if there's a reaction there, they will look to sell to the downside. And if there's no reaction and it tends to break that supply zone, it becomes a breaker block or a flip zone. That is when supply zone becomes a demand zone. Then we think of trying to hop on the buy to the outside or to this area here. Then we look for our trades to all the way to this area. That is the resistance at the top. That is also acting as a supply zone which was created at the top there. You can see the same area here. When we come to this area, when price dropped, we had that change of character here. You can see there was a push down here, change character here, break this low, okay. So if you trace 50% to this area here, that is the inducement zone, that is fair value gap, that is a gap, imbalance gap here before that drop. So you can see if you draw the Fibonacci retracement from here to the downside, you can see we trace all the way to the 61% before the massive drop to the downside, guys. So if you want to trade, that is know where market is going, the direction of price, know where you are going to hop on the trade, and then the last thing you think of is how am I going to enter, or what should be my entry trigger for the trade that I'm seeing, guys. So catch you guys same time, and subscribe to the channel, comment if you have any question, guys, and I'll see you in my next video.